Ready for Cameron?
Yeah.
Give it up for Cameron. Alright, I think it's pretty obvious what I'm going to talk about. But in case you didn't know, it's tax time, so I figured why not give a couple tips so we can make sure we're paying the least amount. Anybody want to pay the IRS more money?
No.
Alright, so we're going to jump into it. So I'll teach you 3 quick things. Do we got the timer?
I'm on.
Alright, so easiest thing just to keep it super simple, regular people English. You want to pay the least amount of taxes. Let's start with financial. So to keep it super simple, let's just throw a regular number out here. Let's say you're making the infamous 7 figures. These expenses here, before we even get to the bottom line, we want to be as accurate on these as possible. So if we're in February, by this point, we should have talked to the accountant, the bookkeeper, whoever. We want this to be as on point as possible. So any conferences, lodging, Airbnbs, meals, which by the way, there are 2 different types. They should tell you that. There's 100% and the 50. Tech, COGS, payroll for the team contractors, all of that needs to be in here. So let's say you're like, whoa, Cameron, I don't know. I think I spent around, I hate that word by the way. Why do you hate that? Because this means you're going to get taxed on 500. Or can we be exact because you kept up with it, you made sure everything was linked up. You have all credit cards and all checking accounts linked up to it. Well, no, this should really be 700, which means now we get taxed on 300. My favorite question to ask, you want to get taxed on 500 grand or 300 grand? 300. Everybody agrees. All right, let's roll to step number 2. Now we can talk about entities. We all know hotbed words. LLC or S corp or partnerships. I'm going to just say partner. And then there's the rare C corp. Which one should you be? That's not a question I can answer in less than 3 minutes. But what I will tell you is whoever you're working with should be able to run these numbers, which we're going to do really quickly in step 3. And they should be able to tell you by the penny, no, you need to save here because you can save more cash. Or no, it makes sense to switch here. You need to also be aware if we switch to this one, S Corp, the famous, most popular one, well, this means now my salary gets to bring this number down even more. So instead of just hitting that transfer button, whoop, now you get an extra salary, extra in parentheses, by the way, of 100K. That's 8. We all know that's 8, right?
Yep.
So now we just drop this down to 200 grand. So now by being an S corp, we just potentially not only have a W-2 added, but now we just dropped our income that we're getting taxed on, and we just paid in federal taxes, et cetera, et cetera. Last thing we're going to talk about is projections. Now, how do I know this in February, March, April, May? We can start doing projections if we know that we're starting right now at 40 grand, give or take. Let's say we want to get to $1 million. Well, I now have to get to 85K by December, give or take. So that's that 85K run rate. Now we can start looking forward in the future and saying, okay, if I know this in May, well, this is really easy to start projecting. Hey, I may need to just save 50 grand for taxes. Well, every month, put 3 or 4K in the side or to the side in a different account. Now, when we get to this time next year, there are no surprises. It's no guesswork. We've already done the work because every month we already know what we're aiming for. We already know the actuals. Well, I didn't make 40K, I made 38. That's fine. I didn't make 40, I made 58. Well, now we just start adjusting these numbers every month, which means at the end of the day, we can see what this is and always be thinking forward. That should be what saves you. This is the complicated one, just in case. How many more time?
Minute.
1 minute. All right, I'll go into these really quickly. A lot of people, hey, I want to partner with my buddy. We're best friends since college, whatever the case. Be aware that the taxes on this one is not going to be favorable to you. Why? Because as partners, I need 3 grand a month just to pay bills. Plus, at the end of the year, this 200 is divided by your partnership percentage. So, if we're 50-50, which is the average, well, I'm going to get taxed now on 100K. Plus, I took 3K every month, 36. I have to be responsible for, in this example, 136K. for taxes. If you're not prepared for that, self-employment taxes are not gonna be nice. Whereas S Corp, we've already handled some of that. Whereas LLC, we're back over here. C Corp, double taxation. Business pays taxes on this, you pay taxes on this. So this is very important to spend time on. This is something you should be looking at every month. But this is something that once you get dialed in, should be a very efficient monthly review for you. Do we do questions or that's it?
Cameron, how can they work with you?
That's very easy. Just shoot me a DM on Facebook and we'll work it out.
Bam-o, boom-o. Can we get over Cameron?
Yeah.